if you always do your analysis nicely, when it comes to entry, price kicks you out and then it goes into your direction, this video is exactly for you. According to my experience when I was starting, this is what I faced a lot. So if you're in that process or into that situation, I suggest you sit tight and watch until the end, right? We're going to talk out the problem that most traders face. Actually, almost all traders, apart from those who are consistent. Even some part of those who are consistent, this is what they experience. Like you enter into a trade, kicks you out, and it goes into your direction. Then you start looking for the problem. Sometimes you find it. Most times you do not find it, right? So according to the few years of trading, this is what I've experienced and what I think could be the issue, right? So I'm just going to use an example of gold so that we can tackle it out. Of course, I'm using setups that I've shared here before. If you guys have been following, I follow up the setups that I've been doing. So our videos are somehow connected. So make sure you always go through the previous videos in case you get lost. But usually I start from where I stopped. So as usual, we're going to do analysis, and then we get to that part of the confirmation and entry. The issue that most traders are facing is this, the confirmation. Most of you think that when the market makes your confirmations, it doesn't matter the type of trader you are, intraday, swing trader, position trader, and also it doesn't matter the method or strategy that you're using. And I won't speak about how you take the trade. Are you using candlestick patterns for the confirmation, or are you using maybe the market using liquidity or fair value gap, how you guys call it? There are a lot of terms that you guys use. There are many methods. Or if you're using MACD and the rest, just watch until the end. It's going to reveal what the mistake you're doing, because I've experienced it and also I've found a way to go around it, right? So especially at the confirmation part. But before we get the confirmation, let's be practical a bit. Let's do an analysis so that we become very practical, and then we see exactly where we go wrong when it comes to the entry part, right? So without wasting time, let's start from how we do our analysis. Now, how do we do analysis? We start usually from the monthly time frame, and I'm going to take you back from how we did this analysis last time. So last time when we spoke about gold, we started from the monthly time frame. And we said that now gold, we wanted gold to come and retest this. After this M here, wanted gold to come and retest this, then gives us a lower high or equal bottoms, which the market didn't do that because it broke above aggressively. So the people who took these buys from here for the retest actually benefited a lot because the market kept making higher highs and higher lows, right? So we spoke about in the previous video. Now, when we go down to the weekly time frame, I again spoke about this impulse here when the market made this impulse upwards. I said that we expect the market to come and make us a retracement, either up to this area here. I'm going to attach the previous video so that you can watch it, or until the Fibonacci retracement level. And I'm just going to mark the Fibonacci retracement level. So when you bring your Fib from down here up to up here, right? We marked this level, and it's exactly where the price stopped. So it was our last area of interest. So I'm just going to remove the Fib. I'm also going to remove this level to make our chart clean. So we said that we wanted the market to come and touch down here before, giving us either, we expect outcomes, the following outcomes: impulse, correction, higher high, or impulse, correction, double top, or impulse, correction, lower high. So we don't know yet which the market is going to give us, but when we go to the next lower time frame, we could get an idea, right? So if the market touched here, we expect it to be taking our trades as the market. So if the market is coming down to retest this place here, or if you took this sell, or if you're waiting for a buy, this is our area of interest. If you took the sell, this is your area of target, right? So there are two ways here. If you're taking a sell from around here with a change of trend, meaning you're targeting this point. If you're taking or this pointer which we marked, I'm just going to attach the video. Or if you're waiting for the continuation, you're waiting for the market to touch this point, then you can take your trade. It's the purpose of this video. Like, how do you take your entry? How do you treat it? Does it first kick you out before it moves, or you're always with it, you move with the trade? So we're going to find out that if you're a victim or you've not been a victim. So then we went down to the daily time frame, and we said that in the daily time frame, the market also had broken a lot of structures. We mentioned the market breaking above this structure, so we wanted the market to come and retest. Also, we said that the market broke above this point here. If you do intraday, it came and retested, so you could have taken a buy. For those who were waiting for the reversal, waited for the change of trend and took the trade up to down here, either to this level again or to this Fibonacci retracement level. Just depends on what type of trader you are. If you're using weekly, this was your target. If you're using daily, there's a continuation trade here for you and maybe a reversal here to this level here, right? So depending on the type of trader you are, you could have used those different levels for your entry and exits. But now what I'm interested in here is, let's assume that you took this trade coming downwards and you're waiting for the market to go upwards. Now, if I'm using the daily time frame, what do I see the daily time frame? I see an M here coming down. So what do I expect? I expect the market to go and retest this level here. So where are my support levels that I expect the market to bounce from? Guys, watch closely here and be attentive. So we have a support here in the daily time frame. I'm just going to mark and change it to blue. Sorry, to red, since we would have blue. So what most traders do is, let me just replay. Allow me to replay for today. So what most traders do is, once the market touches these levels here, they go to their entry time frame. Let's say we want to do intraday, want to trade up to the neckline here. What they do is, they come to their entry time frame, which is H1, and the moment the price touches this point here, they start looking for confirmations. Now here the market did not give us a confirmation. This is for candlestick, what is it called? The candlestick traders. People use candlesticks as confirmations. So they didn't take a trade here. So the moment the market gives them this is a confirmation according to them, they start looking for trades. So what are they going to do? They're going to take their buy here, right? This is their target, slightly below, and then they'll put your stop loss, some few pips there, right? Now, another type of people use liquidity. They will say that, okay, the market has broken this level here and also taken out the support people with this rejection. So they would also take their trade around here, right? Are you getting it? So also usually their stop loss is very tight, like this, just maybe below this wick here. Now let's try to see how the trade played out, right? What happened? Both stop losses of these traders got hit. Are you seeing this? Now, what is the reason here why the stop losses are being hit, right? The reason is, most times we want to take trades, even if the market has hit your point of interest or your target, doesn't mean that it's going to reverse immediately. That's what I want you guys to be keen about. When the market touches your point, remember the market is retesting in also a trend format. If going down like that, also when going up, it's retesting in this format. So you don't want to buy when the market is still facing levels of resistance. You're going to buy into a resistance and the market continues down. Or if the market is still going up, you're going to sell into a support and the market continues up. That is the mistake that most of us did. Personally, I did it when I was still stumbling into my levels of consistency, and also most of you are still doing it, right? Even people are profitable sometimes because of experience. They think that I've seen these things a number of times, so I should just use that experience to take trades before there's a change of trend. So if you've been doing this, make sure you stop it. And the question is, how do you stop it? Another example. Okay, let's assume that you take 2 trades or 3 trades in a day. So you say that, okay, you convince yourself that, okay, this was a bad trade. So let me wait for the market to reach this Fibonacci retracement level. Then I take another trade. The same thing is going to keep happening. Let's check. Let's wait for the market to touch here. So when the market touches here, no confirmation yet for the candlestick traders. So when the market touches here, what do we see? What have we seen here? We have seen either a tweezer bottom or an engulfing. So people those people trade like that are going to take the trade after here. Where's the target? This can be their first target. The stop loss is below this wick, right? That's what how people trade. So let's see what the market did, right? The same thing happens. I think the same thing happens. The market kicks you out and then moves. Now, those people use patterns and maybe liquidity could have survived this for this time, but you can clearly see that there is no level of consistency here in case you're trading that method. What is the way that is going to help you, no matter the strategy you're using? Here, we're not talking about which strategy works or what. Every strategy works, but we're trying to solve a problem that almost everyone has gone through, whether you're experienced or not experienced, or you're just beginning. The issue here is you have to wait. If, for example, here, the market was coming down, I want to take a buy. I have to wait for the market to stop making these lows and these highs. Do not mind about taking a sniper entry. I know most of you focus on sniper entries. You can even take a sniper entry when the market stops going down. You can get a sniper entry from around a point here. You can get a sniper entry from around here. It just depends on the level of which you're trading at, right? So do not focus exactly here, because we don't know at the point at which the market is going to turn. No one knows that, right? Of course, a couple of times you're going to get it right, but no one ever knows that the market will always turn from here or it's going to turn from here. So that causes you to start predicting the market. So what I'm advising is stop predicting the market and react to it. React to what the chart is showing you. So how do you clear this, right? So I'm just going to remove this. How would you have managed this issue? You would have managed this issue in a way like this. For example, we had our Fibonacci retracement level here. I'll just redraw it. I shouldn't assume. So from down here up to up here. Personally, I use the weekly time frame. So we see we have our Fib level here. And my target is here because there's a hidden structure here. So your target should be here. At most, your other target should be here. So I like using the structure in weekly, whether I'm going to do an intraday trade or I'm going to hold it for some time. So then I'm just going to take it a little bit back. So when the market touches this point here, this is my area of interest, right? I'll go to my favorite time frame of entry and I'll wait, right? You can clearly see that the market is still on a downtrend. The market is making lower lows, lower highs, lower lows, lower highs, lower lows. You cannot want to buy when the market is still in a downtrend. Here, the market is still in a downtrend. I know there's a pin bar that you're seeing and the rest, but yes, those who have told privately, you can see in this move here, the market is trying to show us that it's getting tired, but it's just showing you the first ways of knowing that I'm almost reversing. It's not telling you that I've reversed, now take the trade. No, it's just telling you, hey, I'm almost reversing, right? But it's still a downtrend. It can easily come and stop here, then it continues down. Or it can easily come and stop here for those who trade other methods of trading, then it goes down, right? So what am I waiting for? I'm waiting for the market to come and react to these levels that were not tested. Let it react and show me that it has reacted. Then when it breaks above, I'm interested in taking that trade. So let's see what the price did. Okay, it came and reacted a bit, created for me a resistance. So when the market takes out this resistance, right? This is when I'll be interested in taking these trades. Are you getting it? Or if you don't want to trade from there, you can also wait for it to take out this level here, right? You can see here, the market created this resistance here. So after taking out this resistance is when I'll be taking my trade from this point here, right? And I'll be targeting that level. If not, and you want to play it safe, you can also wait for the market to take out this level here. So when the market takes out this area here, this area here, then you can take your trade, right, together, because also that's another level of resistance. What you're trying to avoid here is that you don't want to trade at, if you don't want to buy into a resistance. Are you getting it? You don't want to buy into a resistance and you don't want to sell into a support. That's what you're trying to avoid. So if you ever want to become consistent, that's the issue that you need to tackle. I know most of you are saying that I do my analysis perfectly, every level is drawn nicely, but when I take a trade, kicks me out and continues. Watch out for that, and then you'll come and tell me. So that is it for today. I wish you guys a profitable week ahead.